After hitting all-time lows, is now the time to buy Canopy Growth? Well, the chart suggests not yet. If we go to the monthly chart, price needs to get above the 13 simple monthly moving average, which also is the level where on the monthly chart that was previous support. Not yet, because when you look at the weekly chart, we have some selling wicks, and the highest one coming in at about 68 cents. Before we continue with the analysis, let's look at this article. It is coming from the Motley Fool, and it talks about the fundamentals. Canopy Growth significantly shrinks its losses in Q1. Is now the time to buy. So last quarter was an unusual one for the company. The troubled cannabis producer didn't incur huge impairment charges. Its loss was just a tiny fraction of what it was a year ago, and it even achieved year-over-year revenue growth. Has the company finally turned things around, and is now a good time to buy the stock, or is this just a one-off result for the company? So for the first quarter of the fiscal year 2024, that ended on June 30th. The company's net revenue totaled roughly $80 million, showing a modest single-digit improvement from the prior year. The biggest growth driver was its BioSteel business, which features sports hydration products. Its sales more than doubled and now accounts for a third of Canopy Growth's top line. Storz Bickel, the company's vapor business, was the only other segment that generated double-digit percentage revenue growth. And this is kind of like a breakdown of the different segments of Canopy. Even though the Canadian pot market may not be all that strong, with a diverse business, Canopy Growth does have some operational segments that can perform well. The problem is that those segments aren't necessarily profitable. Amid the stronger revenue growth, Canopy Growth did see an improvement in its overall gross margins. The company did slash expenses, but ultimately it was a lack of significant impairment charges that resulted in a smaller net loss this time around. What's bittersweet for investors is that Canopy Growth, its fastest growing business, is also one with the worst margins. During the period, BioSteel reported a negative gross margin of 24%, and as it works on simplifying its operations and reducing cash burn, one of the options on the table that Canopy Growth is considering is the potential sale of BioSteel, which has been a cash burning operation. So what's the takeaway? Although Canopy Growth has been reducing costs, the business is still nowhere near profitable. Canopy Growth's earnings this past quarter weren't as impressive as they may have appeared to be at first glance. Its problems with lack of revenue growth and poor gross margins aren't going away. And as long as that is the case, investors shouldn't waste their time on this troubled pot stock. Again, technicals. So we have short-term resistance at 68 cents. Longer-term resistance at $2. Against potentially what appears is some type of bottoming that's occurring. Now, short-term confirmation that you at least want to see, you want to see the moving averages. This is the 13, 26, and 50-day moving average. You want to see these starting to point upwards. When you start getting crossovers and they start pointing up, then that's going to give you some type of indication that a bottom may be in. But until then, for you conservative investors out there, don't even bother investing in Canopy. If you're in it, well, you got to make a decision whether you want to hold or take whatever remaining capital you have and move it to something that will potentially work in your favor. Thanks for watching. Subscribe, please. Like the video.